See, already just answer this capital gains question also. Question number 2. See, in share market, these terms will come, capital gain and all these things will. See, basically, this investors, what he is getting a capital gain. Whether the first statement is correct, just read the statement. When there is an increase in the sales of a product, when there is increase in the sales of a product, no capital gains arise. Capital gains arise when the share or the value of some items, financial items increases. That is capital gain. You can't say that when the sales of a product increases, it is capital gain. How can you say that it's a capital gain? Capital gain is what? The capital which you have bought have increased over a period of time. Here what it has happened? You bought it for 550. You didn't do anything. After a few days, it became 560. You bought a house. After a few years, it has increased. That is capital gain. But if you are saying that I sold 10 cycles or 100 cycles today, I can't say that it's a capital gain. For every cycle, you might be having a profit. That is all. That's only a profit. That's not a capital gain. Capital gain is, see, you can increase the sale by going for a discount, or you can increase the product of sale by sell at a loss also. You have seen some showrooms saying that they are selling at a very low price. They want to finish it off. That sale might not even give you profit also. So you can't say that increasing the sale of a product will bring capital gain. Capital gain arises when there is a increase in the value of an asset which you have, capital asset. So first statement is wrong. If first statement is wrong, you can eliminate A and D. So from here you know that second statement is correct, but you read it. When there is a natural increase in the value of the property owned, any property. So that is capital gain. Third statement. That is again an increase, means there is an increase in the value. Whatever reason, there is an increase in the value. That is capital gain. So answer is 2 and 3. Now another UPSC's favorite area is in relation to, I told you we discussed, see, in India the two major stock exchanges are, Bombay Stock Exchange and National Stock Exchange. So these two index are, so India is very famous for its, India's capital market is, well, stock exchange is very famous by its index. Similarly, US, New York Stock Exchange have its own index. Japan have its own index. Japanese Stock Exchange is having its own index. Every country, Europe have its, London Stock Exchange have its own index. And just have an idea which all stock exchange is in news. Only that much. Any major stock exchange which is in news, it is important for you, because already UPSC asked 2 questions related with not our stock exchange regarding the, so whenever there is a news related with stock exchange comes in relation to, for example, Nikkei, which is a stock exchange of Japan, if it is in news, or Chinese stock exchange like Shanghai Stock Exchange, if it is in news, just it will come. Its stock exchange have come down, like Sensex have come down, it will show that this index have come down. That is important for you. We will see it, some question, how UPSC asks question in relation to these index type of question. Question number 7. See that which one of the following pair, it's a pair question, and they asked for not correct. It means that 3 are correct, only 1 is wrong, and that wrong is your answer. See, choice B, you see it. SHOMB is Shanghai Composite Index. SHOMB is Shanghai Composite Index. Where is Shanghai? China. So that is wrong. That is not correct. So from this question you got, what is the wrong answer? From here you got an additional knowledge. What is that? Japanese stock exchange name is Nikkei. UK it is FTSE. USA, in USA one of the stock exchange indexes Nasdaq. Then answer question number 16. Question number 16, 16. Hang Seng is Hong Kong stock exchange. Hang Seng is Hong Kong, not Seoul. So if you know that that is wrong, what is the answer? Eliminate 2. If you eliminate 2, there is only one choice. Answer is 1 and 3. If you know only one, you will get the answer. So from here, you know that in New York Stock Exchange, there is an index called Dow Jones. In London, we already know that, FTSE 100. Now, okay, just try to understand that in whenever a country's, if suppose Sensex and Nifty index is falling drastically every day due to a lot of economic factors, when this Sensex and Nifty index will fall every day continuously, any factor, what is the reason? There will be more selling than buying. When people start, when there are more beers, what everyone will do? Investors will start selling the shares. Why they are selling the share? Because whatever gain they made, they want it and they are going back. So when they hear the news, like that's why whenever any government make a wrong decision, it will be reflected in the next day, or it will be reflected in the next that day itself, but we will see it in the next day in the newspaper. See, we see it in the next day only. We are when we see the newspaper, we see that okay. Suddenly, see all this. So that's why whenever the government want to take a decision, what about budget? Once the government present the budget, what happened to the stock market? There was a rise in both Sensex and Nifty because what they were expecting. See, they will speculate that okay, they are going to harm us, they are going to impose tax on us, or they are going to increase tax on us. But that didn't happen. What is the major tax the stock market people will be worried about? Capital gains tax. Government didn't touch it. So they were happy. And regarding the government borrowings, government did not increase. It restricted itself. So it was, so the market welcomed the government decision. How the market welcomed the government decision? By showing an increase in the Sensex and Nifty. So try to understand that when the market is, when there is a sharp fall in the share prices. So share prices means when the major indexes are falling. We call that situation by a name, what is called as meltdown. So meltdown is associated with capital market, especially stock exchanges. Meltdown. So don't get confused. This term is used only in your capital market module in relation to stock exchanges when there is a fall in the share price. General term. So similarly we have learned one more down. What is that? Slow down. So that is you studied in different chapter. Where? So this is to avoid confusion. We studied slow down in relation to national income. In relation to GDP. When there is fall in GDP, so not fall, when there is slow down means when there is slow growth. When there is slow growth rate in GDP, we call it slow down. Okay, and when there is, in relation to again another term, recession. Slowdown and recession is related with what? National income. When there is fall in growth rate, it is slowdown. What is growth rate? GDP growth. And when there is negative growth rate, what do you mean by negative growth rate? The growth rate is in negative territory compared to the previous year. Compared to the previous year, GDP have shrunk, fall. So fall in GDP is recession. Those who have not attended, for time being, watch my video on this national income. So at least you have an idea what is this. We'll discuss later on. So be very clear these terms. You'll come across these terms: meltdown, slowdown, recession. So meltdown is in relation to fall in the. So just see that question on question number 5. It's again a pair question. First statement is correct. Question number 5, first statement is correct. Second statement is wrong. Recession is fall in GDP. Slowdown is fall in growth rate. So answer is 1 only. Answer is 1 only.